We're going to talk about Yearn.Finance today. Why is it melting and what does it mean for the future? So hi everyone, welcome to the channel. If you are new, subscribe, bell button, like, comment, hiya. Hello. So, Yearn.Finance, it's not looking too good. I know you're probably looking on the screen going, oh, it's $10,000. Well, there's a lot of unhappy campers, let's just put it that way. Like I say before, you know, realism is a key thing. Do not buy at the tops. Do not buy in the emotional kind of FOMO rush of anything in life. You know, if you're really happy, you don't want to make promises to someone because it may change the next day. It's likewise if you're really sad, you don't want to go and eat those pizzas, for example, if you're really sad and upset because your favourite football team's lost 7-2 against Aston Villa. Let's not mention that. Moving on though, with this said with investing, it's vitally important we don't get sugar-coated in the FOMO, the influencers. Yesterday's video, watch it, because people do get people wrecked completely. Happens. FOMO is a big thing. I experience it a lot myself. It happens, you know. But this is a kind of like a sore topic. I've spoken about this in the past, and I still maintain it. The technology developed to allow this to happen is pretty good, like for the space overall. The ability to do what this does, by all means, it was created in a bedroom, I know, but it's enhanced the market space a little bit in terms of what people can do. That's pretty good. However, the token side of it, problems, big problems, because in my opinion, I feel that this has been killed by copycats and by a fall in market due to rug pulls. That's my overall fundamental belief. Whether this is going to go lower or not, I don't know, but we're going to talk about it in terms of why these coins are risky and you should be very, very careful. So stick around. Let's talk about it though, because as I say, a lot of unhappy campers. It's down 60% in 30 days. That's not good. It's actually down 77.1% from all-time high. Not good. I've done a lot of videos. I did them in September. Is the DeFi a bubble? A lot of people ridiculed me for that. Sorry guys. If something goes up so dramatically, it's going to come down. It's just gravity. Throw an apple in the air. You know, Mr. Newton taught us that one. We've got to be careful. And the fundamental key line of this is the technology in what it's been created is alright. But the dickheads, the scam artists and the rug pullers are ruining it. Exchanges have took a bit of that and put it onto their own exchanges like Binance Savings and lending and all kinds of stuff. That's pretty good in some ways. But I want to talk about Binance in a bit more detail in a second. Oh, this is a fun video. Anyways, moving on. Let's talk about it first. So what is it? First things first, and this becomes very, very important very, very soon, is, as I mentioned before, this was pretty much created, in a bedroom. It was created for a individual, single entity, for his own use. It was put on the open market and it went fucking mental. It went crazy, okay? And then people started using it, looking at the source code and building their own little variations. We've seen some new adaptations of it. Curve, as an example. Just to give you one example. Let's go back in time. Bear with me. I want to see what Curve price is. CRV. This is probably worse. Okay, so with that said, definitely a bubble. Is it bad? Is it good? Is it what? In terms of this, the FOMO element of this as an investor has been the one that's the worst part. This still works. This still does its job. It still functions as it should and why it should work. That's fine. No issues. It's the token value that I want to focus on. Because people thought that this was going to go to 100, 200, 300,000 and it hasn't, which is a shame. In terms of stats, there's still like a lot of token volume. As you can see here, the lockups, it's doing all right. You know, there's still a lot of people using it. There's still a lot of people in there and all kinds of stuff. You can see the kind of the weekly earnings sort of thing, the APY sort of thing. It's all there. But the fundamental levels is, I want to talk about this. This is a really good post because it does highlight some executional sort of stuff. Now the first thing here, the first point was, I mentioned it before, this project isn't be a use it at your own risk. This would scare 90% of the users away, and it is a very responsible statement. But at the time of this writing, there was 750 million of assets already in the system. So it's already kind of showing you that it was taking off, even though it was in beta and it was to be used at your own risk, which is absolutely fair enough. You are locking up funds in liquidity form to be, it's scary. And I'll go over how it works in a second. But we need to talk about this as well. In terms of all this as well, it's kind of scary to think that it is a great project, great execution, a great first mover advantage. That was it, in my opinion. First mover advantage was the reason why people that's what I feel, has absolutely rocketed. I still feel the same as this person. It is very, very early days and it still has a lot of room to grow. But the problem is the copycats have, I think, ruined it, in my opinion, going into the future of this post. This is in August. That being said, since that point, there's been a load of rug pulls, a load of copycats with the word .finance in it or something finance, something .f, whatever, to copy the first move advantage of what this achieved, which is great for no one really, other than the early investors who have probably sold anyways. My overall opinion of this is, I think it just reminds me of so many projects that have done well in the past when it first boomed, and then something else came along and just went, fuck off. It literally slapped it, which is a shame because it's hurt investors, it's hurt people's reputation of it. And I still, as I say, the technology side of it, really good. Like, it has enhanced the entire space. But people have ruined it, as always. Everyone ruins things. So let's talk about how it works in simple, basic terms. You got the Yearn, right? So that's basically the big product behind it. The ability to get the huge, big return of investment from providing liquidity to other providers. Simple as that. You get money back. Simple, right? Cool. It's a much better way of doing it. It's called yield farming. Zap is essentially basically going in with the Curve finance side of it. It's an aggregate stable currency lending for all the stable currencies. So you basically get the Yearn token, you put it into Curve, and you get more income coming back to you. Basically, it's a simple transaction. You get an estimated APY every single, daily return essentially over a course of a year. That makes sense? Hope it does. It's mental. You've then got the cover side of it. Is utilizes open insurance of your holdings while pool. So let users exchange between 4 stable currencies, and it's basically providing liquidity. If you use Uniswap and stuff like that, it's the same thing. So with this in mind, all you're doing is essentially providing liquidity. It's getting provided elsewhere throughout all the decentralized exchanges, and you're getting returns back to you, right? Supercharged basically, because it's finding the best rate and it's just aggregating it for you. It's pretty cool. It's a good idea. And you can see that already on Binance. If you go on Binance already, if you go into the lending and the savings, you can get much higher returns using their pool, like 20, 30, 40%. Whereas staking traditionally, it's a bit different. So that's kind of how it works. In terms of the wallets, it already has synchronization with all the big wallets, Web3 supported wallets, so MetaMask, Ledger, Trezor, Coinbase wallet, Trust wallet. In that way, it is your tokens, it is your coins, which is great. So if you're using it and you've synced it up with all those kind of decentralized, wallets, your exchanges, your ledgers, etc., stuff like that, it is relatively safe. But the value of your tokens is not if you are an investor. So if you're providing certain liquidity to get earnings, fair play, you'd probably be pretty safe. But if you're not, and you've just went, I'm going to buy that token on Binance because Binance have listed it, I'm going to come on to that now, because I think that overriding thought of it is going to go up in value. Well, you may actually find that the token value might actually go down versus what the actual product gives you. This is the sort of situation we appear to be in. Curve still works, but if you're an investor, you've lost a chunk of money. So that being said, happy days, right? With that, let's move on to the chart. And I want to talk about Binance. Now, I don't want to mention this too much, but over the last 2 to 3 months, you've probably noticed something. Everything that Binance lists, it rockets and then dies. My belly just rumbled then. You look at Utrust, it rocketed died. Great project, love it to bits, one of my favourite. This rocketed and died. That audio program that went on, rocketed and died. There's quite a few. You could probably go back and have a little look and see what happens. Is Binance just a distribution platform? I think it is. Scary. But let's do some analysis on this. Let's talk about price analysis in terms of what can happen. If you're an investor in this, you're probably, worried. I would be, because especially if you bought at the tops, it's a massive amount of value to lose, especially 77% at current price levels. It could go a lot lower. We're in a downtrend. Simple TA. Moving averages, these are the 8 and the 13. Downtrend. Ugly. If you sold there at $32,000, roughly where the crossover is, or pre-crossover, whatever, or maybe even a bit lower, 30k, whatever, you'd be probably counting your lucky socks right now, thinking, oh, I'm okay, because it has majorly melted. But we need to do some technical analysis on this to figure out what's happening. In my overall opinion, we're not done dumping, which is scary. And what I'm going to do here, I'm going to show you something. The scariest thing is this is a absolutely fundamental catalyst of a move on a Fibonacci, literally almost to perfection. What I say by that is, I think this is going down to 5k at least, and you're probably going to be shitting yourself when you're hearing that. The reason being, low, high to low, retracement into the 618 level, rejected in and around that region. We've already went all the way down to this extension target. I think we're going down to this target minimum, which is the floor, back to where we started, and potentially lower, which is scary. Now, I want to talk about a few little things regarding this as well, because I don't want to scare people, but I think that that is the most obvious target in the world. Okay, you can't really get away from that as it stands, that bottom. And that's a simple price analysis of that swing. That is a huge momentum swing. You can't really get away from its textbook. Retracement back into the kind of recovery, rejection. Where is it going to go? Target 1 will be there, target 2 will be there, and target 3, this freaking bottom line. That is it. I can't really get much, it's still in a downtrend. It's still forming lower lows, as you can see. Low, 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 ooh, ugly. So just be careful. What could happen on the short term time frames? It could actually bounce at some point very, very soon. I imagine it would bounce somewhere. I'm not quite entirely sure where, because we've lost this support as it stands right now, which it was previous levels. As you can see here, wick, all these body closures, melty. It will find some sort of support. If it does find some support, it may well look to retrace back up to those EMAs, and then you may well find that it may just melt further. But the whole world at the minute in terms of crypto, especially DeFi, it's not looking good. Not looking ideal anyways in that shape. No matter how good the project is, if people have lost trust in the word of DeFi in terms of the copycats, the rug pulls, etc., it's going to get worse. Simple as that. You can't really get away from it. In terms of weekly analysis, let's just have a little look at the weekly time frame. It doesn't look good at all. If we're going from this top level here to this bottom, and I do apologize, this hasn't bottomed out yet. We could look for a retracement up to the 22k, but I see it very unlikely until we know when this has actually turned around. We need to see it turn around. We need to see it find some sort of momentum. So we can't really do anything there. So just be careful. One thing as well about this, look at this bottom top area as well. If you're looking to start from this wick up to this level, it didn't even retrace half of what we were, nowhere near that much in terms of value. It literally retraced for a day, back up. It went up a few $1,000s, obviously, but nowhere near enough to get any sort of coverage of like any sort of momentum. So yeah, $5,000 looks more and more likely. Just be careful. It will bounce at some point. It has to. It can't not bounce somewhere. So yeah, just be careful. So overall, that is today's video. I do apologize, it's not the greatest in the world. If you've never looked at this and you've never seen how it works, it's not a bad little system. It's much better than it used to be. But as I say, if you're looking to use it, it's probably the best thing that you can do. But if you're looking to invest in it, I'd be very, very careful. In terms of use case and all kinds of stuff like that, Yearn.Finance, as I can see here, yeah, if you've got stable currency and you want to make it work, certainly something you can do here. So overall video done. Sorry if I burst bubbles. I do apologise. But bit of realism. I think this price is going to go lower. And as I say, I've got a feeling that the correlation between the Yearn token and what the product does it's not going to matter that much.